The world thinks motorcycles are money pits, but a handful quietly outperform stocks, real estate, and even gold over the last 2 decades. Some rare machines have not just survived, they have multiplied in value, with auction prices hitting nearly $500,000. What makes these investment-grade motorcycles so different, and how can you actually spot the next one before everyone else? The numbers reveal a hidden market you have never been shown. Let's break it open. Auction ledgers, insurance databases, and private sale registries form the backbone of credible motorcycle appreciation analysis. Every number in this market starts with a transaction, recorded as a date, a price, the condition, and for the best documented bikes, a full chain of provenance. Hagerty's valuation tools, for example, aggregate more than 15 years of sales, drawing on both public auctions and private deals. Classic.com and similar aggregators add another layer, pulling sales data across platforms and geographies. Each sale is logged with its own details: model, year, mileage, sale price, and sometimes even restoration notes or original paperwork. To compare returns across decades, raw prices alone do not tell the full story. Inflation eats away at nominal gains, so analysts use the Consumer Price Index to adjust every sale into constant dollars or pounds. This allows for a direct, apples-to-apples comparison between a 1990 sale and one from 2023. The key metric is compound annual growth rate, CAGR. It is the percentage return you would need each year, compounded, to turn the original sale price into the latest one, after adjusting for inflation. The formula is this: take the real CPI deflated sale price at the end, divide by the real price at the beginning, raise that to the power of 1 over the number of years, and subtract 1. With these tools, it is possible to track performance for individual models, not just the market as a whole. When a Honda RC30 moves from a $15,000 showroom price in the late 1980s to $80,000 at auction 3 decades later, the real CAGR can be calculated to show true performance. This arithmetic turns what might seem like collector folklore into clear, repeatable evidence. The next step is to test which bikes actually meet the liquidity and sample size standards that make these returns meaningful, and to watch for the traps that can distort the numbers. Not every bike that posts a big sale is a true investment-grade asset. The real test begins with how often a model actually trades hands, and at what spread between bid and ask. Models that only appear at auction once every decade may show a spectacular gain, but without repeat sales, those numbers are little more than anecdotes. Liquidity is the first filter. Analysts look for at least 2 or more sales per 5-year window, not just isolated spikes. In the Hagerty and Classic.com datasets, this means a bike like the Honda RC30, which has dozens of recorded transactions since the 2000s, passes the sample size test. In contrast, ultra-rare machines such as the Brau Superior Alpine Grand Sport might command headlines but offer little data for reliable trend analysis. Bid spread is another signal. If the gap between the highest bid and the seller's reserve is wide, or if the final hammer price sits far below the high estimate, that is a red flag for thin demand. Models with consistent tight bid to estimate ratios, especially in the early years of their collectible life, are more likely to sustain upward curves. Auction records reveal that when a Ducati 750 Super Sport green frame consistently clears its top estimate, it is not just luck, it is a sign of real, broad-based demand. Survivorship distortion can skew the whole picture. Public auction data tends to over-represent the best-preserved, lowest mileage examples, while private sales often vanish from the record entirely. This means the headline compound annual growth rates you see may be flattered by selection bias. To avoid the trap, serious analysts discount models that only trade in perfect condition or have a handful of known survivors. The discipline is simple: trust models with frequent, transparent sales, and beware the temptation to chase one-off miracles. Only then can the story of appreciation be separated from the myths that cloud the market. A single Ducati 750 Supersport sits under the auction lights. The catalog estimate printed clearly, $150,000. The room is tense, but it is a phone bidder, anonymous and silent except for curt nods relayed through a specialist who sets the pace. Bidding opens at $100,000 and climbs in $5,000 increments, each bid landing with a sharp call. Within minutes, the number crosses $175,000. Another bidder, this one on the floor, signals at $185,000, but the phone does not hesitate. When the price hits $200,000, the room shifts. A few watchers check their phones. Murmurs ripple at the back. The auctioneer barely pauses. $210,000, $220,000, until the floor drops out and the two phone paddles duel alone. At $201,600, the hammer falls. The catalog had predicted a strong sale, but the final result outpaces even the high estimate. Underneath it all, the bike's documented race history and matching numbers have turned a rare Ducati into a prize that bidders are willing to fight for, dollar by dollar, in real time. A 1929 Brook Superior SS100, once described as the Rolls-Royce of motorcycles, crossed the auction block for nearly $500,000. The catalog headline reads $497,000, but the story behind that number is written in invoices and workshop ledgers. The restorer, a specialist known for meticulous concours-level work, logged hundreds of hours rebuilding the engine, fabricating missing parts, and sourcing original hardware. Labor rates for this caliber of restoration often run between 70 and 120 pounds per hour, and a complete project can demand 400 to 800 hours. Parts alone for a Brew SS100 can eclipse 30,000 pounds, with rare components sometimes requiring custom fabrication. By the time the bike reached the auction stage, total restoration costs may have approached 100,000 pounds, not including years of insurance, storage, and routine maintenance. When the hammer falls, the apparent windfall is quickly narrowed by these real-world outlays. For the restorer, the satisfaction of resurrecting a legend is part of the reward, but the net return, once all expenses are tallied, offers a sobering counterpoint to the auction day excitement. The economics of ownership reveal that headline prices often mask the true scale of investment required to bring a blue-chip classic to market. A Vincent Black Lightning crosses the block at Bonham's Las Vegas, drawing nearly $1 million, $929,000, for a motorcycle built in 1951. Only 31 Black Lightnings ever left the factory, and this one carried Australian race history and a land speed record. But as prices for Vincent soared, so did the risk of forgery. In the years following high-profile sales, the Vincent community faced a wave of counterfeit frames, restamped engine cases, and fabricated logbooks. Forensic examiners, some trained in law enforcement, others steeped in club registries, began spotting the warning signs. Number pads ground smooth and restamped, fonts that never matched period factory tools, and paperwork that unraveled under scrutiny. The consequences were severe. One buyer, convinced he had secured a matching numbers Black Shadow for 85,000 pounds, saw the value collapse after a forensic check revealed a restamped frame. In the world of six-figure motorcycles, the difference between authentic and fake can mean losing half your investment overnight. Every big sale raises the stakes, and every would-be investor faces a simple test. Verify every number, every document, or risk watching a dream turn to dust. Scarcity and cost define the line between a collectible motorcycle and an investment-grade asset. Production numbers matter. Bikes built in runs of fewer than 100 often become so rare. They are illiquid, hard to buy or sell at any price. For most models that have shown strong appreciation, the sweet spot lies between 100 and 3,000 units produced, with reliable survival estimates from mark clubs. Beyond production, transaction costs quickly erode headline returns. Auction buyers' premiums typically range from 10 to 18%, and sellers' commissions can add another 5 to 10%. On a $200,000 sale, these fees alone can absorb $20,000 to $30,000. Carrying costs stack up over years. Insurance, climate-controlled storage, and periodic maintenance easily reach thousands of dollars annually. Before calling any bike an investment, the numbers have to clear these hurdles. Production must be within the viable band. There must be at least 3 comparable public sales, and a net return must survive the friction of real-world ownership. Proof of origin paperwork is non-negotiable when the stakes reach 6 figures. For any motorcycle touted as investment grade, the bare minimum includes the original purchase invoice, early registration, or logbook, and a clear, continuous chain of ownership. Factory build sheets, heritage certificates, and complete service records add layers of confidence. Missing documents or gaps in the timeline should trigger immediate caution. Inconsistent or absent paperwork is the #1 reason genuine buyers walk away, even on rare models. If a seller resists providing a full document pack or avoids independent inspection, that's a hard stop. The risk isn't just overpaying, it's losing half or more of your money if the bike's identity unravels under scrutiny. No paperwork, no deal. That's the final safeguard before any money changes hands. Right now, demand for rare motorcycles is rewriting what we call an asset. As new records set the pace, yesterday's garage find becomes tomorrow's trophy and investment. The next market surge may already be idling in someone's shed. The road to value is wide open. What's your next move?